Krish, it's great to see you. And why did this take the market by such surprise?
Yeah, sure. Kelly, thanks for having me. I would probably say that what Micron is going through is a typical memory down cycle. But I think what is different is just the pace of, the collapse in demand, increase in supply, flooding of inventory is actually very different from prior cycles. You're seeing the demand slow down one by one. First, you saw, PCs roll over, then smartphones. You're seeing like slowdown in data center, hyperscale. Auto seems to be still holding up, but a lot of the end markets are slowing down. And on top of it, like I said, you have excess inventory. I think with Micron specifically, they've been kind of telegraphing or signaling the weakness pretty much on a consistent basis. I think that's one of the reasons why the stock is only down 5%. But if you look at some of the derivative names, like semi-equipment names, they're down much higher because what Micron kind of implied is that the weakness in capital spending could last into calendar 24, which the market is not really expecting.
So in other words, Krish, it's not that people didn't anticipate some weakness, but that it could go on for all of next year, and that was worse than anticipated?
Yeah, exactly. I would probably say that, the magnitude of the down cycle is worse than what people expected. The reality is that no one really has, clarity or visibility into demand beyond, I would say several weeks or even a quarter. But the expectation is that things could improve in the second half of calendar 23. What I would say is that clearly we do not have the visibility, but over the next 6 months, the customer inventory could get worked down. And that actually is a positive in terms of pricing. But today we have excess inventory with the suppliers like Micron, excess inventory with the customers who are hyperscalers, slowing demand, massive supply.
And one additional question, when we see names like AMD and NVIDIA, which were some of the top performers last decade, when we see them down, 9% today, does that seem justified to you? I mean, are they more exposed here than even the likes of Micron?
No, I mean, it definitely seems a little bit of a stretch, I would say, to be completely honest. I think the read-through people are using is that the demand scenario is really weak. It's going to take a while to recover. I think one way to think about it is, if you look at the end market for chips, AMD is a CPU, GPU company, NVIDIA is GPU, Micron is a memory company. And Micron was one of the first ones to actually, in early June, to report weakness in demand. So memory actually has been leading us into the downturn. So there is a view that memory would lead us out of this downturn. And if that downturn is getting prolonged, that could mean like the read-through would be like the other guys are going to take a longer time to recover. So memory needs to recover first before all the other semis would recover.
Am I wrong, or have we gone in lightning speed from chip shortage to chip surplus? Is it as simple as that?
Definitely. I mean, you're seeing pockets of it, right? I think there's still some parts of chips which are actually still in short supply. There are like some high profile, I would say, like specific analog components, etc. And then some trailing edge is definitely in short supply. But memory, I don't want to use the term commodity, but it is viewed as a commodity, kind of fungible. So if you have multiple suppliers, the customers tend to, kind of use them or mix and match them. So I think that's one of the reasons why memory went into a oversupply situation faster than many of the other, specific analog specific chips. But yeah, clearly you're definitely seeing what was the undersupply last year massively turn into short supply, especially for specific chips like memory and hard drives.